Is Saskatoon real estate about to crash? Because if you read headlines, scroll social media, or talk to that one friend who watches national real estate news, you'd think prices are about to fall off a cliff. But here's the problem. Saskatoon does not behave like Toronto, we don't behave like Vancouver, and we definitely don't behave like the US. In fact, if you're waiting for a massive housing crash in Saskatoon, history says you may be waiting a very long time. So if you're buying, selling, or thinking of relocating here, stick around because the last 3 minutes of this video might save you years of regret. I'm Conor Palendat, realtor with Bedger Real Estate Group, and if you need a top producing team to help buy or sell a home with, all of my contact info is in the description below. I understand why people think a crash is coming. National headlines talk about interest rates, affordability, economic slowdown, overheated markets correcting, and in some Canadian cities, prices doubled in just a few years. When that happens, sharp corrections are possible. But here's where people make the mistake. They assume every market moves the same way. Real estate is hyper-local, always has been, always will be. Saskatoon is not driven by foreign capital, we are not driven by speculation, we are not driven by massive population booms like Toronto or Calgary. We are steady, we are income-based, we are fundamentals-based, and that changes everything. Let's define crash. So a crash usually means prices drop 15, 20%, sometimes 30% quickly. Inventory floods the market, buyers disappear, days on market explode. That requires one of two things: oversupply or forced selling. Now, ask yourself, do we have oversupply in Saskatoon? No. We barely have over 2 months of inventory right now. A balanced market is closer to 4 to 6 months. Detached homes in popular price points, extremely tight. Entry-level detached, competitive. Well-priced homes, multiple offers still happening. This is not crash behavior. This is a supply constraint. Now, let's talk about how Saskatoon real estate functions historically. Saskatoon almost never crashes. What we do instead is level off. We plateau, we move sideways. We absorb supply, then we gradually climb. You can look back 10, 15, 20 years, even during national slowdowns, even during oil dips, even during economic pauses, we flatten. Now, have we had crashes before? Yes, but it's the outlier, not the norm. Regardless, we end up growing again. Why? Because our growth is tied to income, to local employment, to steady migration, to lifestyle buyers, to families. We don't spike wildly, so we don't crash wildly. We behave more like a stable small cap stock than a meme coin. This is the piece most people miss. Inventory right now, we are barely above that 2 months of supply. 2 months. That means if no new listings came on the market, everything would be sold in about 8 weeks. That is tight. A crash requires excess supply. We do not have excess supply, and new builds are not flooding the market fast enough to change that dynamic. So when someone says prices are going to collapse, ask them, where is the inventory coming from? Because it's certainly not here. So why do people talk about a crash? I talk to buyers every week who say, I'm just gonna wait, prices have to drop. And I understand that instinct. Nobody wants to buy at the top. Nobody wants to feel like they overpaid. But here's the risk. If Saskatoon does what it usually does, which is level off and then climb slowly, waiting could cost you more than buying slightly higher today. Let's say prices stay flat for a year. Interest rates soften, inventory stays tight, and then competition returns harder in 2028. Now, you're buying in multiple offers again, but at a higher baseline. This is how Saskatoon has historically moved. Now, I'm not saying prices can never soften. In fact, they can. If we saw a major job loss cycle, significant population decline, or inventory magically jump to 5 or 6 months, then yes, you would see some price pressure downward. But right now, we are nowhere near that environment. Employment is steady, migration into Saskatchewan continues, and inventory remains low. That is the opposite setup of a crash. So what does this mean for buyers? Here's the practical takeaway. Stop trying to time the bottom. Start asking, can I comfortably afford the payment? Does this home fit my life for 5 to 10 years? Is the area strong long term? Because in Saskatoon, time in the market usually beats timing the market, especially in a city that rarely experiences dramatic swings. And if you're a seller, do not price like it's 2021, but also don't panic. The right strategy now is accurate pricing, strong presentation, understanding your segment. If you're in a competitive price band, buyers are still there, but they are educated and they are cautious. Pricing properly still wins right now. So my professional expectation for 2026, stability, selective competition, modest appreciation, segmented performance. Entry-level and mid-range detached homes remain tight. Higher-end homes move slower. Condos remain price sensitive. No crash, no explosion, just Saskatoon doing what Saskatoon does. If you've been nervous about buying because of crash headlines, you're not alone, and I hope this brought some clarity. If you're relocating to Saskatoon and trying to understand how this market truly works, that's exactly why I make these videos. And if you want specific numbers for your neighborhood, your price range, or your situation, reach out directly. Real estate is personal, timing is personal, strategy is personal, but fear-driven decisions rarely age well. If this video helped you see the bigger picture, give it a like, subscribe, and share with someone who's twisted themselves into a knot of worry. Thanks for watching and have a great day.